I believe I am Andrew Pollard. Thank you.
Okay.
So the title of my presentation is going to be The Queen of the Silver Camps, Where Grade Reigns King. We trade on the TSX Venture under BRC and on the OTCQX under BKRRF. I'm also told we're on the German exchange. Never tried it. Forward-looking statements. I'm told if I show this, I have license to say just about anything the hell I want. So let's give it a whirl. Okay, so Blackrock, we've got the highest grade undeveloped large silver asset in the entire industry right now. We made our discovery about 3.5 years ago. In that time, we've now drilled out from first drill hole to where we are now 6 million tons at over a 0.5 kilogram per ton silver equivalent, and that's block diluted grade. There's no lead or zinc. There's no base metals in our equivalents. It's just silver and gold. On an in situ metals basis, works out to being about 50-50, depending on the price of gold and silver that you use. We're right dead smack in the heart of the silver state of Nevada. If any of you have been to Nevada and driven along the highway, it's known. You'll see on the highway, it says, "Welcome to Nevada, the Silver State." Why is it known as the Silver State? It's because of this district that we've just shown new life for. This is the second largest historic silver producer in Nevada, second to only the Comstock lode, even though the Comstock was much more gold rich than this. So this is the highest silver concentration deposit in Nevada. And 90 years after production shut down, not due to metals prices, but due to some technical issues and the emergence of the Great Depression, we've shown already that the old timers left a hell of a lot of gold and silver behind with some serious grade. We're on private land in Nevada. So, you know, the Fraser Institute's already ranked Nevada as the #1 jurisdiction to be in globally. Private land in Nevada is unequivocally the best setup you can have. Why is that? It's because there's zero federal involvement. It means it's private land, it's patented claims. It's just state and county level permits that are required. So what would take a normal company 3 to 6 years to permit in Nevada might take us 3 to 6 months. So there's effectively zero permitting risk. In fact, this is, you know, the town of Tonopah is there because of the original silver discoveries. In fact, there's a mining museum right next to our property talking about the significance of our property. So yeah, we're in good shape there. And the metallurgy, you know, I mentioned it's just silver and gold. We're the only high-grade silver story in the industry right now of the developers that's just silver and gold. Why is that important? It means it's going to be a hell of a lot cheaper and more straightforward to process. We don't have to go through the extra cost and steps to make a lead zinc concentrate. So let's shove off. This one slide is effectively the entire investment thesis if I'm sitting in your shoes. What it is, it's our enterprise value ounce to the ground ratio multiple against our peers, and we've separated it out by grade. So what this shows, first of all, every single dot on there represents all of the advanced exploration and silver projects in the industry that are 80 million ounces or bigger, the standalones. First thing that should stand out to all of you is that there's not many. Unlike gold or other metals, I mean, there's 15 or 16 listed on here. This is our peers. The other thing you'll see, just like me in high school, is the industry is severely lacking in grades. Thank you. Oh my goodness, tip your waiters. So, you know, you'll see most of our peers under 100 grams per ton silver equivalent or less. If you go out by high grade, there's only 3 high grade stories. There's Dolly Varden, there's Vizsla, and there's us. Blackrock's the highest grade. We present block diluted, which our peers don't. They present undiluted. So even though we've already kneecapped ourselves, cutting down our grade by about 30% or so, because we want our resource to look real, we're still the highest grade project in the industry. But most importantly, we're trading at a discount to our peers. Look at this. I'm trading at half of the ounce in the ground ratio to Dolly Varden, maybe 2/3 of what Vizsla is. We're in private land in Nevada, so no permitting risk. Highest grade asset, and our metallurgy is much more simple. There was a time, you know, we only put out, since we started drilling this, I put out 2 resources. One was our maiden resource in April of 2022, right at the beginning of the Fed rate hike cycle. At that time, all of the high-grade ounces in the industry were trading for north of $250 an ounce in the ground. My ounces, my peers. Today, I'm trading at about 40 cents an ounce. That's the leverage call option aspect of owning equities. The volatility, the leverage on the way down is painful, but the leverage on the way up is pretty fun too. We've seen that. We saw that in 2020 when we made our discovery. There was also a time, where we're sitting at right now with 100 million ounces at the same grades is what Silvercrest had with Las Chispas when they put out their maiden PEA. At that time, they were commanding about $5 an ounce in the ground back in 2019. I'm 40 cents. That's the leverage call option on the price of silver that you have by owning these sorts of equities. What this shows, this is something that no one in the industry shows, and it's what our resource would look like if we doubled the cutoff grade and showed it at 400 grams per ton silver equivalent. Why do we do this? Because, things can also always get worse. I don't believe anyone in the industry of my peers shows their resource above 300. Why is that? It's because high grades normally don't tie together. Ours does. If I double the cutoff grade, meaning if silver and gold tank, if oil goes up, inflation rises, I still got 70 million ounces. The only thing that changes is our average grade ratchets up to just under 800 grams per ton silver equivalent, block diluted. So what this means is that the lights get turned on this operation, they never get turned off. We just had a very famous analyst initiate coverage on us named Ron Stewart. Ron is now working with Lee Jones Gable, but before he was an analyst, he was Senior Vice President Exploration for Kinross, little company. He's surmised his mine flow cash model conceptually envisions would be producing at about $13 all-in sustaining costs. So one of the lowest cost operations out there. So the Tonopah district itself is known as the Queen of the Silver Camps. The king would have been the Comstock, but now the king, as I mentioned, is the grade. It's a standout in the industry. I've had a 7.5 million ton met test done on my property. That's what the historic miners pulled out between 1900 and 1930. From that 7.5 million tons, just under 200 million ounces of silver and 2 million ounces of gold were pulled out. So what does that mean? It means this district was high grade, but most importantly, it means the metallurgy on this thing's phenomenal. I'll get into that in another slide. This was a very, very famous discovery in 1900. The Comstock lode had petered out in the 1890s or so, and 2/3 of Nevada's population had left chasing riches elsewhere. It was this discovery that led to the last real gold rush in Nevada up until World War I. And this was the center, this is the largest precious metals district in America at the time, pumping out gold and silver. This is the story of Tonopah just on a production bar chart. It was discovered by 1900. When I say it's famous, one of the guys who discovered it became governor of Nevada 10 years later, based off of the fame he got through here. It's one of those historic Wild West mining towns. Wyatt Earp was a deputy sheriff on our property, ran a saloon. Mark Twain was through there. You'll see hockey stick chart up around 1910. Some big time mining companies set up shop, and then right around World War I, fell right off a cliff. But the real nail in the coffin happened as the production moved westward. The original discovery was made from big outcropping veins at surface on the east side of town. It was seen as an east-west vein corridor. The old-timers did no drilling back in the day, so they just followed the veins underground. And all that production over the years moved westward. Right when they got up to the edge of our property, they encountered the biggest vein in the entire district. It was called Victor. They mined it down to around 1,880 feet back in the 1920s. But as they got deeper and the vein kept exploding outward, they got below the water table and they flooded out the mine. It's an interesting point in time in history in the sense that it had just gotten electrified, the town. So they tried to use electric water pumps, and wasn't all that much water at the time, but the electricity wasn't all that reliable. So they'd turn on the pumps and it would lead to brownouts and blackouts, which isn't exactly ideal when you got some people 1,800 feet below. But this is a big mining company, so they stamped out years and years of mine life. They took out a whole bunch of debt by a guy, given to them by a guy by the name of Charles Schwab, not the financial tycoon, but the steel magnate. Mr. Schwab became the largest shareholder in the company. And they sent away for these big diesel generators and heavy-duty water pumps to be built and shipped over in Europe. Right at that point in time, and that's that real nail in the coffin there, because they stopped mining around 1925. Took 4 years to ship over the water pumps and diesel generators and install them. And the Great Depression happened. The company, Mr. Schwab saw the writing on the wall. He went to Philadelphia and San Francisco, told all his good friends to buy. What a great story Tonopah was, sold his shares, called the note, sent the company into foreclosure. It went into Chapter 11. 90 years after that, we're the first group to go back in. It's this purple claim block that's effectively the missing link in the district. That was that company that went belly up. And the most eastern, northeastern portion of that property is that where the last mining in the district took place. There's literally a mining museum right next to our property there overlooking the Victor headframe. It's the biggest headframe in the district. And 90 years after production shut down, our first drill hole was a proof of concept. It proved that the old timers didn't stop mining because they ran out of gold and silver. We hit 30 meters of a kilogram per ton in our first drill hole, plus 2 other veins on top of it. One was 3.6 kilos. This is our resource. We put it out in October. 6 million tons we've drilled out in just 3 years. I told you before, all the historic production was 7.5 million tons. We've effectively drilled out another Tonopah district in 3 years. This is just a moment in time, too. It should be easily conveyed now that this thing's going to be a hell of a lot bigger by the time you get underground and start operations. But what we're showing is our cutoff grade. This is based off of first principles. This would be how it would be shown in a PEA. We factored in dilution. It's an underground operation. It's going to be about 70% long hole stoping, 30% cut and fill, and we only model down to 1.5 meters. So it's completely, it'll be conventional mechanized underground mining. It's the grade here that should stand out, though. The cutoff grade, it's not an arbitrary cutoff grade. It's what it's based off first principles. So what we perceive to be an actual operation actually cost. Well, if that's 200 and our block diluted grade's 500, it means you're making money hand over fist. So you remember that slide I showed you before where the old timer stopped off. It's that Victor area. So right here is what we've drilled out. In the northeastern part, that's Victor, where the old last mining took place. We've now drilled out 4 kilometers along the same system from where the last mining took place. The red represents the 100 million ounces that we've drilled out so far. The purple represents known veins we've drilled into. We just don't have the density to include them in the last resource just yet. This is one big mineralized vein corridor. I don't have 3 different deposits. It's one big system. It's going to be very straightforward to develop. One of the nice things about our property is that right in the center of gravity of the deposit, at the southern edge of that resource, where you'd want to put your decline, is also where our shallowest, highest grade vein is called, and that's called Bermuda. It's over 650 grams silver equivalent. What does that mean? It means the first vein you hit, the shallowest one, once you get underground, is going to be your highest grade, and that's going to have a huge positive consequence when it comes to payback, for example, and IRR. It's going to blow out the whole deposit, and we think we've got a lot of upside potential there. In terms of resource expansion, if I just draw a circle between the center area and that northwest step-out area that we've hit, that's about 1 kilometer of strike along a series of veins. That alone, if we fully drill that out, another 30 to 50% right there. And all the drilling we've done so far, it's been from surface. Once you get underground and we can tighten up the drill spacing to M&I and reserve classification, what you'll see is you won't be penalized on the modeling, meaning the average grade should naturally ratchet up to what you'd be mining, meaning we think what you'd be pulling out there is more realistically around 650 or so on a block diluted basis, not the 500 that we're currently at. So what does that mean? Even without adding new tons, I'll see the average grade ratchet up with more drilling, meaning more ounces. Metallurgy, this is the mill on the property. Sadly, it burned down in the 1940s, but this was producing back then, and this is just a stamp mill. So all of that historic production was standard milling. And it was made a doré at site. Now, we've done a whole bunch of metallurgy since we started, and the initial results we've got line up very well with the historic record. At first pass, we've got 87% silver recovery, 95% gold. But right now, we've got some more met studies underway where we think we can see those rise incrementally without really complicating the process that much more. So that's another potential to add some more easy ounces without drilling another drill hole. The queen of the silver camps, I told you, the king is grade, but also the king is Burger King right across the street from my 100 million ounces. You'll see our drill rig right there in between a Comfort Inn and Sweets and a Subway sandwich shop. And on the other side, you got Burger King. Why am I showing this? It just means that there's not a better setup in mining other than maybe Val-d'Or, in the sense we don't have to build anything. We've got about 20 motels and hotels. The tallest building in Nevada up until the 1940s was the Mizpah Hotel right in the center of Tonopah, which was all of 6 stories. It's still there. It's been fully redeveloped. It's pretty cool. But the setup is great. No power lines, no man camps needed. This is straightforward. There's a huge workforce there. Kinross's Round Mountain Mine, which has produced 15 million ounces of gold already, is about 30 kilometers north. Now, it turns out Tonopah is not just a silver district. It's emerging as the Carlin Trend of lithium. Right next door to us, so what I'll show you is the blue claim block you see here. These are patents, our private land. We've found early on that the system in Tonopah, the gold-silver system, isn't exactly east-west as it was originally thought. The mineralization's following around the margin of a caldera. So picture a volcano blow-off top, and the precious metals seem to be following the inner rim of that. So they start trending upward, and we figured they'd curve up around towards the north. So right after we got the property, we staked about 20 square kilometers of BLM claims. Bureau of Land Management. We did some drilling up there to see if we could catch the upper margin of the caldera up there. And unfortunately, we didn't hit gold or silver, but we hit lithium in every drill hole. It turns out right next door to us to the west, fitting into our map like a Tetris piece, would be the second or third largest lithium resource in the world, owned by a company called American Lithium. They put a PEA on it around this time last year, outlining a base case of $3 billion. We've drilled out 7.2 square kilometers now at surface. This is our cover rock. It's just a clay deposit right at surface. This is the extension of their deposit, no doubt. It trends right down to our property, and we're hitting the same grades. We use the same cutoffs. We think if we back of the napkin it right now, we'd have about a third to half the tonnage that they do. So that could be a nice, I don't know what this means for us. We're not a lithium company. We in fact did a joint venture earn-in with a lithium company to bring their expertise to develop it. They've already spent a lot of their own money drilling it out with core last year and improving the grade profile. So, it's just interesting in the sense that I've got the highest grade silver gold deposit in the world right now at underground, and at surface, we've got what looks to be a pretty massive lithium deposit up there. In terms of catalysts, we've gone from first drill hole ever in the property. So we're sitting on 100 million ounces. We're at standalone potential already. I mean, I'll put it this way. When Silvercrest had the same ounces that we had at the same grades, that's when they put out a PEA. So what we're looking right now is how quickly we can put a development lens on this project and start looking at conceptual mine designs and moving it and de-risking it forward that way. And within the next month, we're going to complete our acquisition for 100% ownership in this. When I did this deal originally, it was right as the world was shutting down due to COVID. Silver had fallen from about $20 an ounce down to $12 an ounce as the world was shutting down. A lot of big companies were looking at this at the time, but none of them could get to site. And it was a David Goliath sort of thing. We pulled the trigger. We're going to own this property outright for $3 million all in. It was priced as if there was no discovery to be made, or maybe the myth of the old timers was a bit of a fairy tale. This was a good deal. Our first drill hole added $100 million to our market cap that same week. Granted, it coincided with silver running to $30 and gold hitting its all-time highs. That was a fun time. So we're buying out the property in the next month or so. We'll clean up the ownership of that for 100%. We're advancing met studies right now. We're looking at hydrologic studies right now to look at how we'd pump that water out that we know is in the mines, and if we can use it for processing the material on our property in a conceptual design. Beyond that, we've just did a financing thanks to the good people here at Red Cloud. Thank you. It was the first bought deal in the silver space since I think last July or so. We upsized it twice. I hate the valuation, but I do like positioning some big name institutions down here, because it means that they're going to get excited once things start tightening up. And in fact, right once we close that, our stock's been trading well above that financing price. So cashed up, we can, we're more than covered through the end of the year, probably much longer. We're looking at development scenarios, economic studies, met work, and we got some money to drill some very, very high priority targets, namely that Bermuda vein that we think has some near surface tons to be added quickly, which will blow out a resource or a PEA. So with that, I'll hand over to some questions.